Let's start with your MPC. We've been talking, Capranzine, in South Africa about our rates likely to react or not to the latest economic data. Your people have made a decision there and unchanged, and the reaction to that?
Well, it's been an expected stance by the central bank to keep rates unchanged in December, following the 100 basis points cut in November. December has historically been a very, very sensitive month when it comes to inflation in Mozambique, and the central bank usually does not make any major moves in reference interest rates. As you know, the inflation for November was up by 1.43% month on month, and this is mainly caused by a change in the food and beverages prices, as well as the adjustment in the local prices of shapa, which is the transport used by most commuters in urban areas in Mozambique. There was an increase of over 40%, and that will definitely have an impact in inflation in the forthcoming months.
What's behind that huge increase like that? And you mentioned a little earlier that September is a time which is different to other months for these indicators.
Well, September is the time when major importers start stocking for the festive season. And not only the normal retailers do their major imports, but also oil invoices start rising from September all the way up to the end of the year. And in November we had a lot of oil invoices that commercial banks felt the pressure to make those payments. And the central bank had to step in with around $44 million for those oil invoices, and that has put a lot of pressure on the currency. And ultimately, that will impact on the inflation figures for November and December.
It also obviously brings into play foreign exchange issues, and what is the impact there?
The central bank has changed its previous stance in the market in terms of foreign exchange. In the past, it used to be quite passive, and in recent months, it's been very, very active in providing dollars to the market, and also squeezing out extra dollar liquidity when needs be, trying to achieve a certain foreign exchange rate that it thinks is desirable for the economy. And I foresee that they will continue to be very active in the FX market, and this follows from the statements by central bank officials that they will make considerable adjustments to monetary and foreign exchange policy to deal with Dutch disease problems that may emanate from foreign direct investment into minerals and gas.
We've been talking on the show this morning about growth generally as well. What are the growth prospects for Mozambique? Is it part of the Africa growth story?
Yes, it is, David. In fact, yesterday, government was in Parliament advocating for the new 2013 budget, and it's forecasting growth of 8.4%. and inflation in the region of 7.5% for 2013. This growth will still continue to be driven by FDI investment into minerals and gas, but there will be more coming from the small and medium enterprises in Mozambique, and this is where the government is making a lot of efforts to get more activity coming from. Unfortunately, mega projects are not providing enough stimulus to the local economy. So the government is changing its investment policies, forcing new foreign investors to provide more facilities to local entrepreneurs.